One retail investor to another. This is Trader72. Welcome back to my YouTube channel. I hope you are all well on this fine afternoon. It is a momentous week coming up this week, guys. There is all sorts of stuff going on politically. We still haven't got any further guidance on what's going to happen between Iran and the US. The latest turn down on the talks by Trump over the latest Iran peace plan. We've got the federal new leadership to the feds and what they're going to do about obviously interest rates. And also we have got the biggest earnings week that we've had in a long time. For some unknown reason, all the big companies, the Microsoft, the Metas, the Alphabets, the Amazons, the Apples, are all earning or giving their updates on the same day, which is rarely happened, I've been told. So we've also got Visa and S&P Global to put into this. There's quite obviously a few other companies. So far, 80% of companies have beaten their numbers. But let's see if these guys do that this week. So without further ado, let's move on. So the first thing we'll be looking at is the revenue growth year on year, the margin outlooks, and obviously what's going on with their forward guidance, which I think is going to be all important. I think we've seen a lot of companies going, great, we beat the numbers, but their forward guidance may be slightly weaker than expected, and because of their high expectations, the expenditure on capex, on the AI, and obviously data centers specifically for these guys there, and the very high pricey outlook of some of these share prices, when they get punished, they get punished. So therefore, it'd be interesting to see who might fall and who might just jump higher and be safe. So this will be interesting. So let's start with Visa, which I own, and is reporting, I think, tonight. Now, Visa's numbers have been, let's be honest, it's been stagnating. I've been pretty much stuck at around the 310 to 312, 316 shortly. A complete compounder, one of the probably most well-known companies in the markets, the American markets. A safe pair of hands. It has a huge moat, huge network effects, and it is what you would call a massive compounder, and a tool booth, even should I call it. Same with S&P Global. Now, what we're expecting? Let's reel through this. Revenue, we're expecting between 8.9 to 9.2 billion dollars, which is 9% year-on-year expectations on revenue. EPS 305 to 315, established around, I think if we can get around 310, it will be a fairly good beat. Key focus will be cross-border volumes, obviously, FX impact, consumer spending trends, which obviously is massive for companies like Visa. We have got some issues. There's lots of issues. Lots of people maybe keeping their money in their purse at the moment, or their wallets, even should I call it. So that will be interesting to see where the consumer spending is with Visa at this moment. So there's obviously clearly a potential slowdown. There's also competition from Europe, which has been coming up, and obviously this capex on the interest rates, which I'm not sure if that is ever going to happen. So there's quite a lot of competition going on with Visa, and I think that might be why the share price has slightly stagnated, and also stablecoin to add to that. But to be fair, Visa are adapting. They always have adapted, so I'm not that worried. Now, obviously, the movement tonight will be, if it's a strong beat, maybe 3 to 6%. If it's a strong, weak guideline or numbers don't quite come up to scratch, I reckon we're looking at 4 to 7%, and that's been quite extreme. Visa's never moves that fast. So I may well stick with it. I may just come out of it before the results and see if it drops further to even get it at a better price. I've done that quite a few times this year, so let's see what comes out of that one. So S&P Global, obviously a key, massive, another massive key company in America, obviously ratings agency, so key market data as well. Now, what we're looking at, EPS 420 to 440, pretty much 4.335 around that mark. Revenue 3.4 to 3.6. That's an 8% year-on-year increase. So we kind of expect them to come up with that. Again, debt issuance could be an issue. Deal making within companies is potentially a little bit weaker with what's going on at the moment. Obviously, less people, less companies in debt trying to fund their debt or maybe fund their AI capex is obviously always a bit of an issue for them. I still expect S&P Global to come up with some strong numbers. Although last week, a couple of months ago for the last trading update, they were severely punished with a slightly weaker forward guidance. and also this SaaS apocalypse situation, which has also got them, intertwined with that, which I don't understand why, because S&P Global are very much AI integrated already and have a very strong model, business model with a massive moat. And again, like Visa, a massive network effect. So let's see. Strong beat will be 4 to 8%. Weak beat 3 to 6. But let's see what comes out of that. So that's what we're expecting for S&P Global. That's Tuesday. Aftermarket and pre-market. I think pre-market. I think both coming out in aftermarket. But please quote me on that, guys. Don't quote me on that for now. But both literally coming out within 24 hours. Now, Microsoft tomorrow, this is the big day tomorrow. This is when all of these big boys are coming out with their numbers. So Microsoft, we're looking at an EPS of 275 to 295 with a revenue of 61 to 64 billion dollars, a 14% year-on-year increase. Again, phenomenal numbers if they can reach those numbers. Key focus will be Azure growth. That's what we'll be looking at, the growth for the forecast. AI demand, obviously, clearly, and Color and Copilot, which has been a bit of a slow starter and has slightly suffered, and obviously the reliability too much on OpenAI, which seems to be changing by the day after OpenAI did a deal with somebody else yesterday. So whether or not Microsoft, they'll be interesting to see where they sit in all of this, really, in terms of specifically the Azure growth of the clouds, which is obviously one of their key drivers, their key money drivers, and also the Copilot and where it's at the moment, and is it monetizing money? So we'll be to look out for that. Now, the strong beat will be between 5 and 10%, I think. A big beat, a big loss will be between 8 and potentially north of 10%. It was last time around. It had a tremendous fall a few months ago on the back end of the update. Again, caught up in this SaaS situation. Don't know why Microsoft is. I think it'll be more about the forward guidance on the Azure and the Copilot and where they're at with OpenAI. Meta. Now, Meta's been on a tear for the last few months. It fell back dramatically after a few issues with avocado, I think, and a few issues, other issues, and they were slightly beaten down. Come back massively. I think the latest share price at C72. EPS, we're expecting about 505 to 535 with a revenue of 40 to 41 billion, or 42 pretty much, nearly 13% year-on-year increase. Again, phenomenal numbers. All of these companies, 14%, 13%, 8%. So, US companies are certainly very strong at the moment still, and not seeing any sign of weakness as yet. Revenue growth, we're looking at something, like I said, 12 to 14%. Ad growth, we're going to see what their ad growth, I think that's obviously one of their key drivers, again, in terms of AI advertising. AI CapEx plan, obviously, we are going to be worried. Same with Microsoft, which have spent a tremendous amount of money. Still, are we seeing enough results from that expenditure? Well, we'll soon find out. But it certainly has worried the markets, and that's why they've all been fairly punished in the last few months. Even so, they've all pretty much bounced back. So I think the biggest beat there would be 6 to 12%. The biggest loss would be, maybe the spending goes up a bit more. I can't see any more further issues with Meta apart from the AI CapEx spending. And again, if they feel it's too much or the forward guidance is slightly weaker, maybe 8 to 12% loss on after the results. Alphabet. Now, the old Alphabet came back from nowhere 2 years ago. It was supposed to be done, dusted. It was going to be replaced by AI and by OpenAI. And look at Alphabet, the tear they've been on. Absolutely phenomenal. EPS, we're expecting a 195 to 210. Revenue between 74 and 77 billion. That's 11% year on year. Key focus will be search trends, YouTube ads, obviously, which is one of their biggest earners, cloud growth, obviously, and AI investment impact. Again, CapEx, how much will they spend? They seem to have been less affected by some of the others. But again, it'd be interesting to see where they're at with specifically their cloud growth. I think a good beat would be 5 to 9%. Weak would be 7 to 12. But I've never seen Google lose that much as that. I think they're a massive behemoth, pretty much. But again, you never know. It depends on the numbers. Amazon. Now, Amazon is currently on EPS expectation of 0.85 to $1 EPS with a revenue expected of 152 to 158 billion dollars. That's 8% year on year. Again, Amazon's been on a tear recently, although was stagnating quite recently in terms of share price. The big forward guidance will be again, how is AWS growth doing? Very similar to Microsoft with Azure, which obviously are both compete, and Alphabet. That will be a key moment to see if there's going to be maybe slight growth, or maybe a slight lesser growth spurt, which could be a big problem, and that could cause the share price to fall. Retail margins will also be interesting in terms of how the retail margins are doing. Less consumer spending, same situation to Visa in that respect. So we'll see what comes out of it. After earnings, move could be between 7 and 12 on a big beat. On a big loss, we could be, or any forward guidance miss, we could be looking at between 8 to 15%. Now, Amazon has been known to drop quite dramatically in the past based on bad trading updates or any bad news. So watch out for that, guys. And finally, least but not least, I think Apple pre-market expectations are between $1.90 to $2 a share, with a revenue expected of the beat between $89 to $92 billion. That's a year-on-year 3%. Now, we all know that Apple has struggled a bit with AI lag. They've been lagging on their fellow Mag 7, but a steady grower, obviously still very much more of a defensive stock in a way, Apple these days. Now, iPhone demand will be obviously very important to see where they're at with that. That's one of their key drivers. Although most people still have iPhones. I should know because I did a course the other day and they were asking who had iPhones. And 60% of the class still had some. So interesting there to see what happens there. Obviously, still relying quite heavily on the Chinese market. So it'd be interesting to see where they are. And the AI strategy, where are they at with Siri, which is not been great recently. But again, there. Buybacks potentially as well to look at. But, they're still doing pretty well. And it's not as if they're on their 52-week low as yet, old Apple. And I think it'd be interesting to see where they go. So after earnings, we're looking at probably between 4 to 8%. Strong guidance. Weak iPhone miss would be between 5 and 9%. And even then, I think that would be a stretch. It would have to be pretty bad news to reach anywhere near 10%. So that's it, guys. That's the kind of pre-earnings expectations by the analysts, and also the forward guidance, which is key to the earnings. Now, I think, as I said, I think on average we're looking at 5 to 12% move on each side. In line will be a bit between 1 and 2%, and a serious miss between 6 and 15%. I think the biggest fear is slowing revenue growth, margin pressures, rising AI, capex cost is obviously a big talking point. So maybe on the plus side, raising full-year guidance, strong revenue, margin expansion, strong cloud demand, which obviously is key to Meta, specifically Microsoft and Amazon, and obviously pricing power, and obviously consumer spending for Visa, and also in terms of company borrowing for S&P Global and the credit rating side. So phenomenal week. As you can see, these are probably some of the biggest companies in America, the most established, the behemoth of the S&P and the NASDAQ. I think from my point of view at the moment, I'm going to be sitting this out. I think it's the best way. I don't normally tend to play with earnings. I used to when I first started. It was a little bit of a gamble, really, because it can go either way. The markets can be vicious sometimes if you miss your forward guidance or your numbers. So the only one I have at the moment that I may well keep is Visa on my portfolio at the moment, which is stagnating, really, if I'm honest, between 310 and 315. Not sure what to quite expect from Visa. I think the numbers will be beat, but the forward guidance does tend to worry me, with the consumer spending potentially being weak, inflation still very much there, and the geopolitical situation, which always affects everything across the board in terms of the economy. So Visa are very much connected to that. So I'm not expecting something too massive, maybe a 3 to 4% loss, and I will buy more of it if it does. So you should probably look at this, guys, as more of a if you're not in the game, if you've got no skin in the game in terms of not owning any of these companies, potentially as a weak forward guidance and a drop, which is an opportunity. Opportunities get you in at a very good discount off its intrinsic price, and that is what you should be looking at. So potentially, if any of these drop by 10 to 15%, as did Microsoft in the last update, which I wish I'd gone in, I didn't go in at the right time, and when it did, it was too late. You have to be obviously quite rigid in terms of what you think your expectancy entry point is. So we could be seeing any of them, or it could be all of them. Who knows? So I'm staying clear until I know what's going to happen. If you guys do own the stocks, then obviously good luck, the best of luck with it, and maybe buy more if it does fall back. Now, like I said, I'm not a financial advisor. I have no financial background. This is purely advisory, and please do your own due diligence before you step in either pre-market, pre-review, or posts, because obviously it is a dangerous game to play with in terms of that situation in terms of earnings. We don't know where it's going to go, and so my advice would be to wait and see what happens next, but it's up to you guys. So that's pretty much it for me. Any questions, any ideas, please do let me know in the comments below. This could decide where the markets go for the next 6 months. I'm pretty sure, or potentially the next year, because I think these are the leaders of the current markets for the past 10-15 years. And I think the key point will be is how are they going to monetize all this expenditure on AI capex? I think it's one of the biggest questions we've all asked ourselves for the past year or two specifically. So yeah, be interesting to see off. It could be a choppy market, so be aware of this, guys. So let's have a quick look at the markets before we go. So just as you can see there, the markets are flat as a pancake. Literally, the forward guidance obviously tonight, there's already going to be kicking off. So I think at this stage, really, we are looking at a pretty flat market across the board. Crude oil is still sticky at 110 and really creeping up now. I have obviously a position, as you guys may well know, so to look out for me, I bought a short position 92 and 100. It's costing me quite a bit of money to hold that position at the moment, but I've got faith that eventually they're going to have to come to some kind of agreement, and the share and the crude oil will come back to some kind of reasonable price below 90. So let's see if my thesis works on that side. So let's see. Apart from that, no major other news apart from the fact that I'm holding Visa at the moment, which is creeping up just a little bit higher before the results. That's expected. United Healthcare has moved up. It seems quite a bit. But really a quiet market. So let's see what comes up next. But anyway, from one retail investor to another, this is Trader 72. See you on the other side, guys. Take care. All the best.